Hello traders, this is Blake Morrow. You are listening to the week ahead video for November 29th, 2020. I hope everybody's having a great weekend and a great long week for those of you that have been enjoying the Thanksgiving holiday in the United States. I know not all of you are in the United States, but if you were, I hope you had a great holiday. And if you have not been in the United States, I hope you enjoyed some quieter markets through the holidays as well. Next week should be a pretty exciting week, but before I get into that, let's talk about Forex Analytics. If you haven't tried out Forex Analytics, it's only $1 for 10 days. Try it out. Whether you want to use the premium version or you want to use the light version, you're going to get to try it out for $1. Just $1 for 10 days. So give it a whirl. Also, when you do that, make sure you download the mobile app and put it on your phone or your tablet, whatever mobile device you want to. You can get it through the App Store or the Google Play Store. But I have to tell you, we've added a couple new features to Forex Analytics, which is pretty cool. I know those people that are using Forex Analytics on a daily basis know that we just added live charting to the Forex Analytics platform, which is really nice as well. So if you're using Forex Analytics, instead of flipping back and forth to your charts, you can actually get your live charts right here next to your analysis. So it's a wonderful feature. Also, one of the things that we have added for those of you that listen to the F.A.C.E webinar on a daily basis, we added the bias chart. And the bias chart is something that I do with you guys and gals that are listening in, and we find what the key levels of support and resistance are in the major currencies and in some other markets as well. So you know what to expect, or where those turning points might be in the market every day. And if the last one that I did was the day before the Thanksgiving holiday weekend, so we update those throughout the course of the week. So if you want to know how I do this and you want to listen in for free, make sure you click on the link in the description on to join the F.A.C.E webinar. And that's a free webinar that we've been doing for years and years and years. So, all right, let's talk about this next week. Now, there was a development that happened over the weekend, and I'm filming this in a little early. You might be able to, you might be getting this a day later. There obviously things can still happen between now and the time the market opens, but overnight, the top Iranian nuclear scientist, I guess, that was working on their nuclear enrichment programs, he was assassinated. Looks like Israel is to blame for the assassination, and the problem with that is there might be some retaliation, and a couple of the guys in the office were talking about the beneficiary here may really be crude oil, and I'll take a look at it really quick, and then we'll see what those corresponding currencies might be, because crude has already broken out. You might have seen it this last week where we broke basically the lows from December of 2018. That was capping the market right this last week, and really, this whole rally back from when we went negative, if you guys recall that back in April, we popped through that resistance around the $43, $44 level. And now it looks like that we're going to challenge about 50, which is the previous support from back in 2019. That makes a lot of sense based on what just happened. So in currencies, what could be the result of a spike higher in crude oil? If it should spike higher based on the events that happened this weekend, well, look at the US dollar Norwegian krona. If you follow me via Twitter, you've probably seen my comments about the double top. If you've been following the daily analysis, on Wednesday we were looking for, after we broke down of this bearish wedge, we were looking for a bounce back to 895 to sell into. The highest we could make was 890 before slumping again towards trend lows. But you can see the double top actually points towards a move towards 862. So that seems like a realistic expectation, especially if crude oil continues to rally. Also, take a look at the dollar Canadian. The dollar Canadian, we closed below 130. It's a little divergent here. I'd like to see how the dollar Canadian acts if we get back down to 129 and a quarter, which is down here in these spike lows. But there's a lot of support down here at 129.50 to 129 and a quarter. So be careful. I mean, we could see a spike higher in crude, and then it could come off. That could lead to a move higher in the dollar Canadian, or in the Canadian dollar, which would be a lower dollar Canadian, before a bounce back. So those are things that I'm thinking about just going into the, early in the next week, especially as we wait to see what happens with crude and what happens with equities. Speaking of equities, the S&P, I mean, what can I say? The Dow hit 30,000 this last week. We've seen, the S&P follow suit. The NASDAQ, is trying to make its way higher into this, this bullish wedge. But look at the S&P. I mean, we have a bullish pennant as we're at the top of this megaphone pattern. Can we reach the target of 4,000? That's what this pennant points us to. Yeah, we possibly could. And if that happens, what happens to the dollar? Well, I'm glad that you asked. Look at the euro dollar. I mean, the euro dollar closed outside of this, channel. Now, you guys remember from last week's week ahead video, we were talking about the dollar looking like it was going to weaken. It has. And we're actually breaking down in the dollar index, or breaking out against a lot of different currencies here. You could see a rally in the euro. The Aussie is trying to break higher. The Kiwi is already continuing to break higher. The cable's lagging because there's, the fishery issue regarding Brexit. There's a lot of upcoming dates regarding Brexit. The fact of the matter is the news is going to continue to come in hot and heavy, but who knows? I mean, a deal gets done once and for all. The cable could break the 135 level here, or 134.50, but 135, if you guys don't recall, this is a big, huge descending wedge. And by being a descending wedge, it's a reversal pattern by default. If, because once it breaks, it's going to suggest a big reversal higher. So I'm not 100% sure if that's going to happen. Obviously, it's all about Brexit, but you never know. You never know if the cable could break out. That's something that we should all be paying attention to going into this next week as well. Now, what are the big events that are happening this next week? Well, the big events that are happening this next week are going to be the jobs report. And then we also have Fed Chairman Powell is going to be delivering remarks to both the Senate and the House regarding the CARES Act. So those comments from Fed Chairman Powell could suggest a move, or could suggest some volatility in the FX market. And then obviously we have our weekly jobs reports. Now, one of the things I do want to point out, I haven't used a lot of the charts from Forex Analytics. That's because updates are being made throughout the course of the weekend. So not all of the analysis has been done for these particular currencies. And so I didn't want to go through all the charts, but just remember all of your charts and all of your analysis is being updated throughout the course of the weekend, especially for the basic technical analysis and the candlestick analysis. But the thing I wanted to point out regarding this next week, we are going to start seeing the economic data really start to matter more. We are getting past the presidential elections. It does seem like to me that President Trump has basically, he's transferring power, and it looks like it's going to be a smooth transition of power, which, it's good for our democracy that does happen. He may still be, has a lot of lawsuits regarding voter fraud, what he perceives as voter fraud, or his administration does. But regardless, they're going through with the transition, and that's good for a few reasons. Obviously, in the United States, it's good for our democracy, but but going to the markets, and why that's good for the markets is because it'll bring a little bit of a calm to the markets. But more importantly, macro data will start to matter a little bit more going into 2021. And me as a currency trader, I'm extremely excited about that. I know currency trading over the last few years has been very difficult. And the reason why is because the induced volatility in currencies based on lack of liquidity. Institutions are, have had a more difficult time establishing positions in the market because, they're worried about the late night or early morning tweets that might go off that might change the landscape of the market and move the markets, because those things have happened. So 2021 should really be a return of the importance of economic data, macro data, and rates. So that's going to be good as a currency trader. I'm really looking forward to it. By the way, this is a view of the dollar as we approach the range lows, and quite possibly could break down in the dollar index. So just keep that in mind. One of the other things I wanted to bring up before I let you guys go is, I don't know if you guys have been watching, not gold. Gold's a big one too, but I don't know if you guys have been watching. Where is my Bitcoin? Oh, there it is. I don't know if you guys have been watching Bitcoin. Bitcoin came down to some pretty important support here. There was some news about the Treasury Secretary Mnuchin might actually impose some restrictions about the wallets, and I'm not a real. I didn't read the whole story over the holidays regarding that. I know some of you that follow cryptos a little more closely will be watching that, but it did take a little bit of that bullishness off of Bitcoin. And I have to say, I've been hearing a lot about cryptocurrencies from places I shouldn't be, and it's kind of like everybody's talking about it. There's a lot of hype around it, which now is a heightened risk for a pullback of these cryptocurrencies. I'm not saying that there's no value there. I actually do believe that, and I have been bullish for cryptocurrencies for a while now, especially the last 6 to 8 months. But the one thing I want to point out technically is we might have made a lower high, and if we do, that's not good technically longer term, but B, you might get some people taking profits up here institution wise. There's a lot of like big endowment funds that are putting money towards cryptocurrencies, and the fact of the matter is there's been a lot of attention. So I think any type of major downside that you see in cryptocurrencies will be fairly limited. I don't think that I don't think they're going anywhere. Let's just put it that way. So just keep an eye on, I guess technically I wanted to say keep an eye on Bitcoin at this trend line, because I think this trend line is really important. I had this drawn out as we were falling earlier this week. Let's go to you can see Bitcoin. We do analysis on Bitcoin with Forex Analytics, and you'll notice that, as we were dropping into the support down here, below 17,000, I was like, hey, be careful. This is a lot of support. And we found a lot of support down here. And you can see that since then, we've got a snapback rally. So, and here's all the news. This is the last update because of the holidays. So obviously that'll be freshened up over the weekend. But anyway, I wanted to bring that up because the cryptocurrencies have been moving, and I think it's worth watching. And also, if you're involved, being a little careful at this stage in the game. So guys and gals, I want to say, if you don't join our daily webinars, the link is in the description for the F.A.C.E webinar. We do that every single trading day, Monday through Friday. Come join us. It's free. And, we'll do the analysis on the bias chart and, obviously all the live analysis of the markets with our team, not just myself, but the team. Also, if you found this video useful going into this next week, hey, give us a thumbs up if you're watching us on YouTube. And please share, like, share, and subscribe. So subscribe to our YouTube channel, like the video, and then share it on social media platforms that you see it on. You know, if you see us on Twitter, retweet it. If you see us on Facebook or on LinkedIn, share it if you can. We all appreciate it. Those of us that are putting this together for you over the weekend, you know, we do this for you for free. So make sure you like, share, and subscribe if you can, if you feel so obliged. I appreciate it. And like I said, I know our team appreciates it. Anyway, guys and gals, I hope you have a great remainder of your weekend. Good luck this next week. I'll see you on the F.A.C.E webinar on Monday. My name is Blake Morrow with Forex Analytics. Have a wonderful remainder of your weekend.